Good afternoon, everyone. My name is Ben Ritchie. I'm the Managing Director of AlphaNode. We're an investment management and advisory firm. Pretty honoured to have the opportunity to share with you AlphaNode's thoughts today on the current state of the institutional adoption of digital assets in Australia. I wanted to start by taking you back 8 years ago. An investor walked into my office, curious and frustrated. He'd done everything right in managing his assets. He had a good advisor, balanced portfolio, and a plan for retirement. But after attending a family barbecue on the weekend, he felt that he may have missed one thing. The main topic today, Bitcoin. You see, when he asked his advisor about it in 2017, his advisor told him, "I can't help you. It's too volatile, too unregulated, and too risky." Fast forward to today, that same investor can buy Bitcoin through an ETF, trade it on an exchange, and even hold it in his self-managed super fund. But here's the strange thing. He still can't get advice. We all know that access alone does not result in adoption. Access has evolved, but guidance has not. The market has moved rapidly forward, but the framework that protect investors stayed behind. Too many investors are being left stranded between technology and trust. This industry has solved access, but has left advice unsolved, and that gap has consequences. When licensed advisors step back, the vacuum doesn't stay empty for long. In their absence, a new breed of voices filled the space. Influencers, traders, self-proclaimed experts, algorithms that sounded like authority. Investors are left to piece together their digital asset investment from YouTube and Telegram groups. Billions of dollars have been lost, not because of Bitcoin itself, but because investors followed unlicensed voices. When advice disappears, speculation takes its place. And speculation without structure breeds chaos. We saw the rise and fall of platforms promising impossible returns. We saw coins created out of thin air, pumped by hype and dumped in silence. We saw retirees convinced to mortgage their homes because someone online said, "This one's going to the moon." Crypto didn't fail them. The absence of responsible advice did. And that's the point of today's conversation. If we want to build institutional confidence in digital assets, if we want investors to participate safely and sustainably, we have to fill that vacuum with something better. With something licensed, structured, and ethical. Because advice isn't loud. It's licensed and it's personal. And to be honest, it's time it re-entered the conversation. Now, if it were easy, someone would have solved this by now. But it's not. Because giving advice in this sector is hard. Not from a product perspective, not from a technology perspective. The challenge isn't code, it's conduct. The same rules that made traditional financial advice safe, best interest duty, record keeping, compliance oversight, these suddenly became incredibly complex when you add digital assets to the mix. Let me explain why. We identified 5 core barriers that have kept most advisory firms out of crypto. The first is volatility. In a traditional 60-40 portfolio, 60% equities and 40% bonds, risk tolerance is predictable. Drawdowns can be modelled. The portfolio's volatility stays within familiar guardrails. But a 60-40 with crypto portfolio, that's a completely different animal. Bitcoin doesn't move like equities. It doesn't correlate neatly with inflation, interest rates, or market sentiment. It can fall 30% in a week and then double in the next month. So how do you assess a client's risk tolerance in that environment? How do you distinguish between someone who says, I'm comfortable with risk, and someone who means, I'm comfortable until my portfolio drops 20% overnight or 50% over a week? Volatility breaks traditional profiling models, and that's the first reason advice has been missing. The second barrier, and perhaps the most frustrating one, is regulation. In Australia, we currently have 3 referees and no single rule book. We've got ASIC, AUSTRAC, and the ATO, each with a different lens, each with a different mandate, and sometimes with a different definition of what a digital asset even is. That makes it complex. Advisors don't know where their duties start or where they end, and in that uncertainty, they freeze. I've seen advisors who are brilliant in traditional markets avoid crypto entirely, not because they don't believe in it, but because they don't know how to stay compliant. They don't want to risk their license, their reputation, or their clients' trust. So they do nothing. The third barrier is education. Most advisors can value a company, they can understand earnings, cash flows, dividends, but a blockchain, it's another language entirely. You can't open a balance sheet and see a node network. You can't discount future cash flows when the asset doesn't have any. So the question becomes, how do we educate advisors and investors to understand what they're investing in, not just what they're buying? These aren't just technical barriers, they're cultural ones. They reveal how far the profession has to evolve, because true advice isn't about recommending a product. It's about ensuring comprehension, that the investor understands the risks and the role it plays in their portfolio. That's something a YouTube video can't do. Education in digital assets isn't about hype, it's about translation. And that translation gap is holding the industry back. That is why quality education will become one of the most valuable currencies in this industry. The fourth barrier is documentation. Try writing a compliant statement of advice that covers Ethereum staking. Try explaining risk, yield, slashing, validator lockups, and liquidity in a way that meets ASIC's standards. Try building an approved product list for assets that can change function overnight. How do you disclose the risks? How do you store the records? Traditional compliance tools weren't built for this world. They were built for chess, not blockchains. Documentation has become a battlefield, and most advisors simply don't have the time nor the tools to fight it. And last one, there's fear. No one wants to be ASIC's test case. They've seen the reputational risk. They've heard insurers say, sorry, we don't cover digital assets. So they wait. And while they wait, investors turn elsewhere. They go to platforms, influencers, and offshore entities. And the tragedy is that the investors that need the protection the most are the ones that are least likely to get it. So these are the 5 barriers: volatility, regulation, education, documentation, and fear. Each one cracks the system in its own way. Together, they make it almost impossible for advisors to operate confidently in this market. That's why for years the system has stayed broken. But at AlphaNode, we didn't see it as a reason to avoid it. We saw it as an opportunity to rebuild it. We wanted these barriers to form pillars that we could address and build on. We asked ourselves the simple question, what if advice for digital assets could be delivered with the same rigour, oversight and trust as traditional finance, but with the speed, transparency and innovation of blockchain? That question became our mission. And over the last couple of years, we've been building quietly, methodically, all the systems, the frameworks, the documentation that make licensed crypto advice not only possible, but practical. We didn't wait for the perfect rulebook. We built one that works within the existing regulatory landscape. Now, it's important to state that we are focused on wholesale investors only. With this, we sought guidance, we wrote policies, we stress tested processes, and we built audit trails that ASIC, AUSTRAC, and the ATO would all recognise. Each challenge we addressed directly. We created tools to profile crypto-specific risk. We wrote procedures for compliant SOAs and on-chain reconciliations. We built education models for advisors and investors alike. We reviewed insurance coverage, refined disclosure templates, and built audit-ready file notes. We didn't just theorise about responsible advice, we operationalised it. And as those systems took shape, something remarkable happened. We started building a foundation for something stronger, a bridge between traditional finance and digital innovation. Every bridge has to start with strong foundations, and ours rests on 5 pillars: risk profiling, approved products, documentation, education and oversight, all within the boundaries of an AFSL. First, we'll cover the digital asset risk profiling. Traditional risk profiling asks questions like, how would you feel if your portfolio dropped 15%? That works when you're talking about equities, but in crypto, that's been the last couple of days. So we rewrote the questions. We measure not just tolerance for volatility, but capacity to survive it, liquidity, emotional discipline, and portfolio correlation. We assess the time horizons, the concentration limits, and understanding of custody risk. This isn't a personality quiz. This is an engineering report on an investor's resilience. And once we know that resilience, we can build a portfolio that matches an investor's risk profile. Their knowledge, their skills, all instead of being a burden, all this instead of one that becomes a burden. Next, we tackle the regulation. We approach digital assets as if they are all financial products, and therefore all activities sit under an AFSL. That means supervision, compliance checks, file reviews, breach registers, and continuous improvement. No shortcuts, no grey zones. We operate inside the law and not around it. And that's why it gives institutions comfort, the knowledge that every recommendation comes from within a licensed, auditable framework. Next was the education. Education isn't a one-off course, it's a culture. And we developed all our training for our team internally and are currently finalising a series of learning modules for external advisors. These are not hype sessions, they're structured, compliant education that covers blockchain fundamentals, regulatory boundaries, and client communication. Because an advisor who can't explain crypto simply shouldn't recommend it. Education transforms confidence into competence, and competence restores trust. Okay, then comes the documentation. It's probably the least glamorous, but the most vital pillar. We built compliant advice templates for digital assets. They translate complex on-chain concepts into ASIC-ready language. Staking, the validator risks, the liquidity lockups, gas fees, slashing, yield volatility. Every recommendation creates an audit trail. From the client conversation to the risk scoring to the trade execution and the custody confirmation. It's traceable, time-stamped, and reviewable. In a world where every transaction is already on-chain, the advisor's paperwork finally catches up. And last but not least, the approved product lists and the due diligence. In traditional finance, an advisor has an approved list, a research-vetted products that meet regulatory and risk standards. Crypto needed the same discipline. We created a due diligence process that reviews every token, every fund, structure in the detailed process. Each product type has its own DD structure, from spot assets to ETFs, funds, SMAs, custody, etc. If an asset doesn't pass, it doesn't go on the list. Simple, consistent and defensible. That single control mechanism removes 90% of advisory risk. So together, these elements turn the volatility into structure, the uncertainty into process, and the curiosity into confidence. That's what AlphaNode built and continues to evolve, a system for personalised crypto advice that works. Every advisory relationship becomes a loop. Assess, advise, act, and review. The process is absolutely key. Risk scoring data helps us refine the profiling, market statistics feed into the portfolios, and the process continuously refines. Advice then becomes a living, breathing, learning, dynamic thing, just like the markets it now serves. It means that instead of being stagnant, we can start and continuously evolve as the products do. We believe that that is the future of wealth management. So what does this all mean for the broader ecosystem? We hope that we're building a pathway that means advisors can finally participate without fear. It means investors can receive genuine, tailored advice instead of recycled hype. Most importantly, it means digital assets can take their place inside regulated portfolios rather than existing on the fringe. The next evolution in this industry isn't faster execution. It isn't lower fees, it's responsible advice. Innovation without structure turns quickly into speculation, and speculation unchecked always ends the same way, in lost trust. Because when no one explains the risks, even good ideas start looking like bets. Trust is the ultimate currency in the markets, and advice is how you mint it. When advisors are equipped, educated, and licensed for crypto, we close the loop between technology and responsibility. You see, digital assets are deeply personal for many investors. They symbolise independence, self-sovereignty, and a belief in a new kind of financial system. For those investors, it isn't about exposure, it's about identity. They'll even switch advisors over a 5% allocation, simply to work with someone who understands their conviction. And that is exactly why AlphaNode is here. We're not here to compete with anyone in this room. We're here to complement you. We've built the advisory infrastructure so brokers, exchanges, custodians, product issuers, and institutions can plug in and continue focusing on what they do best. Think of us as a connective layer, the advisory bridge between your product and the investor's portfolio. Our goal is simple: collaboration that lifts the entire standards of the industry. Here's what that might look like in practice. A broker integrates our risk profiling engine into their onboarding flow. A financial planning group uses our education series to upskill their advisors. A fund leverages our approved product templates to strengthen governance. And advisors who don't have the capacity, they partner with us so their clients can add digital assets responsibly. Each collaboration removes friction. It increases confidence and it raises the bar for the entire ecosystem. Because what this industry needs now isn't more platforms, it's alignment. And alignment only happens when we can work together. The future of finance won't be built by whoever moves fastest. It will be built by whoever moves wisely. Advice is the missing link that connects innovation with integrity. It's what turns advice into confidence, curiosity into conviction, and technology into trust. That's the mission of AlphaNode. Remember that investor that I mentioned at the start? The one who couldn't get advice in 2017? He's now retired. He turned 65 in September. He turned his self-managed super fund into retirement mode, and we assisted to sell some of his digital assets tax-free. This has been allocated to ensure that he's now debt-free and can lead a stress-free retirement. Today, 95% of people have heard of Bitcoin. Ownership is at approximately 31%, according to this report, and 29% have the intent to purchase in the next 12 months. These next 29% are not the early adopters that have patience to explore these products. These investors need support. Excuse me. Advice doesn't slow adoption. It's essential for progression on the innovation curve. We stand at a really unique moment in history. Technology has raced ahead of the systems that created trust. That's regulation, advice, and accountability. I've seen firsthand how the absence of advice leaves investors exposed and how the right guidance can change their entire investment trajectory. AlphaNode exists to close that gap. We've built the rails. Now it's time to connect them. So here's my invitation to everyone in this room. If you're building this space and are looking for a compliant key to unlock the next level of growth, talk to us. We're ready to collaborate. You can get access to our latest version of our digital asset risk profiler by scanning the QR code on the screen here. What it will do, it will give you a detailed risk report, psychological report, and suggested learnings, and some insights into the process that we have built. Your honest feedback on this is also very welcome. We would love you to take the time to complete it and also share it amongst your networks. My email details are up there as well, so I'm more than happy to share the detailed advisor report that we have generated at the back end in our system. When we're dealing with advice, it's personal advice, it's not a competitive advantage. We firmly believe that it's a collective responsibility. We want to make Australia the benchmark for what is regulated, responsible and innovative digital asset advice looks like. Thanks so much for your time today.